Hi everyone, and thank you so much for having me. Wow, what a great time to be in the uranium market. Finally, we're starting to see the price movements that we've all been expecting for a while, and this is really due to the constrained supply side of the uranium market. So it's been a tremendous year. The uranium price started at the end of last year at about $50 a pound, and it closed the year around $100 a pound. It has gone up to $106 a pound, but a tremendous increase. We suspect this is going to be a long sustained uranium cycle, and that's really driven by 10 years lack of exploration and development in the uranium space, and of course by demand for nuclear power. You would have heard recently that at COP28, 25 countries signed up to triple their uranium. So it's looking very good for uranium on the demand side, and of course the supply side issues that we've recently had coming out of Cameco, as well as the potential supply side issues coming out of Kazatomprom, are really starting to be felt in the market with the pricing. So 92 Energy, who are we? Well, we're a uranium explorer in the Athabasca Basin. We have a high-grade uranium deposit called the Gemini discovery, and we recently announced a proposed transaction, which is a three-way merger with Atha Energy. Of course, Latitude Energy is also part of that three-way transaction. These are both Canadian explorers in the uranium space. It's a very exciting proposed transaction, and it's a great time to be in the market. We think this new vehicle will really provide maximum torque on the exploration side for uranium, and it's a very compelling assets together, as well as the structure of the company, which we'll talk about a bit more later. So we're in the investor sweet spot. We've got a market cap of 60 mil, as I said, a high-grade uranium discovery with immense potential exploration upside. We've got a fantastic portfolio. It's not just the Gemini deposit. We've got some other great projects as well in the Athabasca Basin. Of course, that Gemini discovery is a high-grade discovery. Some of the intercepts have been extremely high-grade, including assays up to 10%. So just to give you context, 10% is 100,000 ppm, which if you were to compare that with a Namibian project, is many, many times higher. They tend to sit around 500 ppm by comparison. Of course, we've got this strong uranium price outlook that I referred to, and we've got three share price drivers at the moment. So obviously this value-creating merger, which we just announced, we are trading at an the implied price of the transaction right now would be 77 cents. We're trading around 60 cents, so there's still potential for some arbitrage opportunities there, assuming the Atha share price remains strong. Of course, the Atha share price has performed very well since the announcement of the transaction. Atha, just for those of you who don't know about it, is a company. It's based in Canada. It's a CSE listed company. We've recently applied to uplist that to the TSX. And they've been listed since April last year. They have the largest land holding package in the Athabasca Basin and the Thelon Basin in Canada. So it's an extremely good opportunity, and of course a transaction that we're looking forward to, subject to, of course, shareholder approval. Just a little bit about this uranium bull market. I think we're really just at the beginning of this bull market. So you can see we've had a massive price increase. This is really driven by the fact that utilities have to buy uranium. There is no alternative. If you have a nuclear power plant and you don't have your uranium, you have to go out there and buy it. It's basically one of the most inelastic curves that you'll ever see, which really drives prices super high when there's a shortage of supply. The real difference between this cycle and the last cycle is that we have a serious supply deficit in the market, and this is really caused by the Fukushima accident, which happened over 12 years ago now, and 10 years of underinvestment in uranium exploration and development. We've had supply side issues recently announced. So with Niger, there was a coup there. That actually is responsible for a huge amount of the European uranium. And of course, they now can't export to France. We've had a reduction in the Cameco supply, which was announced last year at the WNA conference. And Kazatomprom, of course, who actually represents 42% of the market, they're having potential issues with their supply. And this is thought to be caused by a lack of sulfuric acid, which they need to grow what their production targets are. So it's a real problem for Kazatomprom and Cameco. And of course, both of these major suppliers now are pretty much all sold out of their uranium over the next few years. So that is going to have a serious impact on price going forward. So just a little bit about us, 92 Energy. We're in the Athabasca Basin. It is the highest grade uranium jurisdiction in the world. Uranium deposits there can be 100 times higher than those elsewhere in the world, which is what makes it such an exciting place to be. And of course, we have 10 fantastic projects in this rich uranium district. This is what 10% uranium looks like. So you can see it here on the right-hand side. That's a scintillometer, so when you're actually drilling uranium, you can tell whether you've got uranium by just putting a scintillometer over the core. So it's quite exciting when it beeps really high and you get those big high numbers. So that's 10% uranium, which is exciting to see because it means that the system holds and is capable of holding super high grade uranium. And of course, we've been drilling there for a while now. So we had the discovery 3 years ago. It was made on our 4th drill hole ever. It's been a really exciting discovery, and we've really been drilling uranium ever since. The deposit starts at about 60 metres and goes to 280 metres. We've had some huge intercepts, including 43 metres at 0.62%. So that's 6,190 ppm. And we recently discovered a parallel structure which has some nice copper grades in it, some uranium grades in it. So that's what the next exploration program is going to be focusing on, as well as extending this deposit down dip. So there's lots of potential to extend this down dip at the current zone, but also expand it across to the parallel structure. And this is really what we're talking about here. So this parallel structure, we hit 1.5 metres at 0.2% uranium with 0.5 metre of 3.8% copper. So it's rich in other metals going through the area. We've had some gold as well. And it just shows that there's been a lot of fluid moving through this system, which is what makes it super exciting. And this is really the analogy for Gemini. It's the Rabbit Lake deposit. You can see here that Rabbit Lake has 2 deposits between 2 parallel structures. We actually have 3 parallel structures, so there's the ability to host plenty more additional zones there right adjacent to that GMZ zone. But that's not it. It's all about the trend in the Athabasca Basin. So, of course, as we know, in the Athabasca Basin, when they have a discovery, there tends to be a series of deposits along a trend. We have 14 kilometres of trend, which is yet to be explored. And that is really something that we've been wanting to get to for a while now, but we've sort of been capital constrained, which is what makes one of the reasons that makes this merger really compelling. This new company is combined with the 3 companies going to have approximately $65 million in cash, which can be fully deployed to all of our assets and in particular the Gemini deposit. So this is what the trend looks like, really unexplored, plenty of potential upside. So just quickly, I know a lot of you are here to hear about the benefits of this proposed 3-May merger. So what we're doing is we're combining 92 Energy with 2 other uranium companies listed in Canada. It will be a Canadian listed company. We will have the largest uranium exploration portfolio in the Athabasca Basin and the Thelon Basin, with 7.1 million acres of exploration in Canada. And of course, we have a historic resource with expansion potential. That's coming in from Latitude. That is the Angelac deposit with 43 million pounds of uranium at 0.69%. So this is a really exciting deposit. It has plenty of scope for potential upside. We're really hoping to expand this resource with additional drilling. And of course, you'll have this continued exposure to Gemini. So that's really exciting to be able to get out there and really explore that. We have an exceptional leadership team. Troy, who's going to be running the company, is ex-NextGen, ex-Cameco. He worked at Rabbit Lake Mine for many years. And, you know, so he has seen the very similar geology to what the Gemini project is, and I think he can do some special stuff with it. And of course, I will be going in as an exec director as well. And the other significant benefit is, as I alluded to before, that access to approximately $65 million in cash. So really, this combined entity, major exploration talk, all of that risk curve is going to be dealt with along the exploration curve. So we can see that here we have a comprehensive asset portfolio with maximised talk to exploration upside if this merger goes through, with 7.1 acres of exploration land. That is in the Athabasca Basin, which is basically impossible to stake any more ground in the Athabasca Basin. So this is a very strong position to be in this very exciting uranium market. Of course, we've got that Gemini discovery, which we'll be working on, as well as the Angalac and CMB discoveries. So very exciting to be able to expand those historical resources. And of course, we've got upside to major developers, NextGen and ISO Energy, with a 10% carried interest. So lots of great assets going into this portfolio. And as I mentioned, it's really about the people, the assets, and the strategy. So the combined team has really got some amazing people. I've obviously got a background from Extract Resources and M&A. Troy has that excellent technical and geological background from the Athabasca, but also doing the development side of Arrow, which is the best undeveloped uranium resource in the world. And of course, there's many other great members on the board with really fantastic experience. So what's the rationale for this transaction? As I said, we've got some major discoveries and exploration talk in there. We've got a dominant multi-basin land position. The Thelon Basin is really an analogy for the Athabasca Basin. It has a 120 million pound gigavet deposit in it. That was discovered by Orano, who of course is one of the majors in the uranium space. And so that the Thelon Basin is a really exciting place to be, and we're really looking forward to doing some exploration there. We've got a fully funded program. That $65 million cash is really king, as we all know at the moment with this market. And, you know, we're really looking forward to getting out there and doing some extremely aggressive exploration. An exceptional team with global reach, a continuous pipeline of catalysts coming forward for this new combined entity. So this is the 92E share price, and you can see that it's performed rather well since the announcement of the proposed transaction. So that was announced on the 8th of December last year. We are still trading at a discount to the implied value of 77 cents. So as I said, there's still that arbitrage opportunity potential, of course, subject to the transaction going through and subject to Athabasca's share price remaining strong. The interesting thing is Athabasca's share price has been very strong. It's moved from $1 when the transaction was announced up to $1.30. It's come back to $1.20 now, but still plenty of potential upside there. And obviously our two major shareholders, ISO and Sachem Cove, they've come out with voter intention statements for this transaction. So that's a fantastic thing to be said for the deal as well. So, once again, what are the four potential price drivers for 92 Energy? Obviously, exploration success. The next drilling program will be planned just after the transaction is due to complete. If, of course, that goes ahead, irrespective, we'll still be drilling. We've got highly favourable uranium conditions. The price outlook for uranium has never been better. The political support for nuclear has never been better, and the supply side really needs a lot more mines coming on to be able to satisfy the current demand and the future demand for uranium. And of course, we've got this value-creating three-way merger underway with 92E shares trading well below the theoretical transaction price. Thanks very much. I hope you enjoyed that.